capital gains or cash flow? What should you invest in? What's going on, everyone? It's Blandon here from Mortgage HQ. In this video, we are going to explore the 3 questions you need to ask before deciding whether to go cash flow or capital gains. But first, who said you can't have both? Think logically for a second. If there is a city with good capital gains, there will always be properties in the same city with multiple income, which will significantly increase the cash flow. These properties are like multi-units, home and income, and may not necessarily always be boarding houses. Now, of course, this doesn't mean you should always just buy home and income or multi-units. So here are the 3 questions you need to ask before deciding which one to go for. So the first question is, when are you going to smash that like button for the YouTube algorithm? Because it would help the channel immensely. I appreciate it. Alright, seriously, the first question is what you are trying to achieve. The end goal should never be about how many properties you should be owning, but to build enough equity that you could turn into cash flow, because that's how you're going to live off your investments. Now, what is going to help you achieve this is be in a position where you can borrow enough money so that you can grow your wealth that way. And the obvious thing to do is to put that money in good cash flow assets that's going to be self-sufficient. Now, just to give you guys an example, if you want to retire with an extra $2 million in 20 years, you would want to borrow around $1.2 million from the bank, and you would want to put this borrowing into assets that can grow at least 5% per annum. And the maths will show that in 20 years time, that 1.2 million of debt will gain you an extra 2 million of equity for your retirement. Now, of course, if you are in a position where you already have a lot of equity and you're just looking to build passive income, then the approach would be completely different. So the first important question you should be asking is where you are trying to go with your financial goals. The second question you need to ask, what kind of yield you need to aim for to be in a position where you can borrow this amount of money? Because let's face it, if you try to borrow an extra $1.2 million on top of, say for example, a $600,000 mortgage that is already on the owner occupied, it's not easily achievable. When you're considering a family with 2 kids, and in the current lending environment, that's almost impossible unless they're earning like $250,000 as a household, which means most families will be stuck with just one property, or they could invest in one small investment property, and that's not going to allow them to hit their goal. But by increasing the yield on the property, it will also increase the amount that you can borrow from the bank. Just to give you a rough indication, family of 4 earning around $200,000 of household income, if you buy a property at 4.8% gross yield, the max borrowing would be around $560,000. But if you're able to buy a property with 8.8% gross yield, which is a lot more cash flow and usually are properties that have multiple incomes, that would give you $1.2 million of lending. So assuming that capital gains are not dramatically different, then you're better off to buy the property with higher cash flow and you're able to end up with more leverage from the bank. So the third most important question, once you know what yield to go for, then you want to find properties that fit this yield criteria that you have set for yourself. But of course, no one wants to buy in cities that have low capital gains. A quick way to learn a bit more about which cities has what sort of capital gains, you can use qv.co.nz. If you look under house price index, you can at least see the last 5 years of capital gains in all the major cities across New Zealand. And an interesting fact is that if you look at cities that are outside of Auckland, a lot of these cities have outperformed Auckland in the last 5 years. So main cities doesn't always equate to the maximum capital gains. Now, of course, in some instances, you're not just looking for cash flow. You're in a position where you need to build more equity so that you can expand the portfolio. So that might take you to a completely different strategy, such as joint venture where you do flips together, the BRRRR strategy where you buy, renovate, refinance and repeat, or some sort of development strategy where you're adding dwelling, you're adding value to that property, maybe you're chopping it up, sell half of it, pay down some mortgage, and then you get that equity to go again. So there you have it, the three main questions you should be asking before deciding whether or not you should go capital gains or cash flow. The first is, what exactly are you trying to achieve? What is your financial goal and how much do you need? What yield you should be aiming for so that you can get enough lending from the bank. And third question is, what strategy you will need to hit the yield that you're looking for. And as always, if you find value, please smash the like button for the YouTube algorithm. And until next time, I'll see you again.
My favorite thing about the workshop is how simple it is. So language is really easy to understand, so anyone with no property knowledge can understand what's going on.